All right. Well, thank you everybody for tuning in today. Today we got kind of an exciting announcement, something that's been we've been working on for a number of months right here, and this is relationships actually that Lucas has been kind of harboring and growing over many years. And I guess just to kind of introduce the announcement, Lucas, maybe I'll pass it to you, and you can kind of give us a overview.
No, absolutely. Thanks, Tim. Yeah, it's exciting times. I mean, over the summer, we talked about launching funds for direct investment, giving access to the funds that we have on the platform that we use in the broader strategy. And one of the things that kept coming back was every time we look at a manager, we'd find that they were basically what we call style creep. In their portfolio, where they would start with one strategy and find their way into going into DeFi and blowing up or losing money, and we obviously would try and avoid those managers. But what it showed us is that our DeFi strategy stood up in a pretty complex risk environment, and the DeFi team headed by Reese had built an enviable track record in the DeFi ecosystem. And so I spoke with John and Vimal over at Trovio, who we work with on a couple of other funds. And I said, hey, we've got this portfolio. It's got an audited greater than 1 year track with really solid returns. Do we have a client base that this might be interesting to? And Vimal and John said, well, we have a lot of clients that we're very interested in this, and our client base at Yield App obviously is quite keen to look at it too. So we decided to build it, and using the infrastructure behind Trovio, which is just world class. I mean, when we did the DD on Trovio for one of their funds, it was the one fund that came back with green lights on absolutely everything. It was just a phenomenal institutional grade business that was being run. And they came highly recommended to me by Australia's Sovereign Wealth Fund. I think Vimal, who's on the call, can talk about his relationships there. And so we decided to build what I believe is the first truly institutional grade DeFi fund with our partners at Trovio. So yeah, it's exciting stuff. Vimal, maybe you want to talk a little bit about Trovio and your relationships with there.
Yeah, thanks, Lucas. And again, we're really excited to be entering on this journey with you. So just a little bit about myself. I've been in the markets about 30 years now. I started in Scotland at Murray Johnston and was then at Abbey National, which was owned by Banco Santander. I moved to Aviva Investors down, I think it was 1999, and I spent 10 years there. I was lead portfolio manager globally for global aggregate product when I left. Came over to Australia, Pendle Group, joined there in 2009 and left in July. So I grew that team from about 4 people to 24 people. We ran about $22 billion across cash, credit, government, income, hedge fund, volatility, so all kinds of products. And I had a growing interest in everything crypto, as you do with such an exciting asset class. And then an opportunity came to move my team at Pendle, some of my team at Pendle over to Trovio. So that was an amicable decision. We left Pendle in 1st of July, started Trovio 4th of July, and I'm CIO around there. So the team I run, it covers both traditional finance. So we have a systematic macro fund, which is a Cayman vehicle that we're just about to launch. And then we have a number of offerings within the digital space. So we have a systematic beta fund, which is run out of Sydney. And we have PMs as well in Singapore who run a digital asset market neutral fund. So I'm very keen and incredibly happy that we've entered into this relationship as we continue to build out our offering in this space. And our whole goal around what we're trying to do is build, very high quality product for institutions who want to make that first step into what is an emerging ecosystem. And so I've taken my 30 years of asset management experience. My whole background is in building product, building process, governance, trying to mitigate risk as much as possible. And we've taken that skill set in and married it with Trovio's very strong tech underpinnings, because we are ultimately a tech company, and that's where our backbone and our core skill set is.
Perfect. Thanks, Vimal. You know, and I'd like to say probably on behalf of the entire team, we're extremely excited for this partnership, to be working very closely with you guys to be able to offer a truly powerful DeFi fund for institutional clients. And you know, on that, obviously we've gone back and forth for numerous months on the topic, and you know, our DeFi team has consulted you guys at times, and before ultimately moving ahead with this partnership. And I think everything has revolved around the risk management framework. And I guess on this, over to our DeFi team, could you kind of take us through kind of the risk management framework that we have in place, and you know, what to expect?
Yeah, sure. Thanks, Tim. So by now, most of our community will be familiar with our commitment to client capital preservation, and how that marries up to the risk profile that we deploy into. For the newcomers, I'll add a little bit of color. So our internal risk framework uses a sum of 135 measured variables that are compiled from historical data to analyze all aspects of market exposure, with a particular focus around 4 key pillars. Those pillars are smart contract risk, platform risk, counterparty risk, and market risk. These data points are our internal benchmarking, and we continuously regression test them. This data helps us identify not only the protocols that are safe and reliable for capital allocation, but it also enables us to flag particular market oversights. The case of UST is a great example, where our risk model flagged the market oversight into the liquidity depth of UST, enabling us to affirm an outcome via a simulation 8 months prior to that collapse. So that's a really great example of how the model provides, I guess, market oversight, and enables us to deploy client capital safety. But the depth of this model is quite extensive. I think everyone we talk to, and we take through the core factors that underpin this thing, is thoroughly impressed, and it's really great to be able to leverage this in the partnership with Trovio.
I think one of the other things that's really interesting from our perspective is we diligence a lot of managers, and every diligence report that we've come back where managers are you know, participating in the DeFi ecosystem in some form.
Did we lose Lucas? We did. All right. I think. Can you guys hear me? Okay.
Yeah.
Okay. I will come back to Lucas when his connection reconnects. But I guess just on that, Wim, I'll probably pass this over to you. I mean, obviously you've understood our risk framework. We've gone through this at length with you, and how does this kind of fit in with Trovio's kind of business model and the business approach that you guys take?
Yeah, very much so. I mean, I think the gist of what Lucas was saying as well is that he's right. There's a lot of ways you can approach the DeFi space. A lot of funds have exposures to DeFi. The way that we like to build funds, the way I've built funds my entire career, they're effectively building blocks within a which should be used within a broader balanced portfolio. So you tend to find that a lot of funds in this market effectively have a number of different drivers of attribution. So whether they be staking, you know, some ICO, some beta, you know, there might be numerous ways that they can generate return, and they put all those returns in the same portfolio. I'll pass it back in a minute. But the way we like to build funds is by very clearly defining what role that portfolio is supposed to do, how it's supposed to be utilized, be very transparent about it, and as Lucas mentioned earlier, make sure there's no style drift in that product. And that's the reason why we really like the DeFi fund process that you guys run. It's this singular focus on just running DeFi, and also making sure that you understand what the drivers of DeFi. Because when I step back with a TradFi lens and look at the space, DeFi to me, it's the same as a credit vehicle. It's you're taking credit in different protocols, and you're taking exposure to different protocols. You're exposed to credit risk, and you need a very, very comprehensive way of monitoring those risks, filtering those risks in what is a very quickly changing ecosystem. So the 135-point process and model that you guys have and utilize, I think, is incredibly key to make sure that you respond as the market environment changes. So not only can you see what's what's right in front of you, but you can see the ripples and turbulence beginning to build. And that was really key around the performance around Terra Luna early in the year. And so that was one of the things that really impressed us about the process. And the DeFi space for us, while it's been through ups and downs, and everyone's aware of the market movements and gyrations we saw around kind of May, June this year, it's very obvious the space is going to grow. A lot of the lower quality players have left the space, and it feels like it's a much cleaner space to engage in now. That the protocols there seem to be high quality, and it's not an area you can just dismiss and walk away from. It's not an area you can also do half-heartedly. If you do DeFi, you've got to do your sole focus as DeFi. And so this product sits very well against the other funds we run within the Trovio group, and will enable institutional investors and wholesale investors to be able to build a quality, diversified digital assets portfolio.
No, absolutely. Thanks you, Wendell. I think on a personal level, I think we completely agree in just the early stages that DeFi is at, and it's continued to evolve and shape in front of our eyes. So just kind of changing gears a little bit. Obviously, launching a regulated DeFi fund in this environment is obviously something we're forecasting together as great long-term growth potentials and very promising future. But how is Trovio and how are you guys tackling the current volatile market, particularly the macro environment that you guys are seeing out there?
Yeah, it's very interesting because crypto and digital assets have this promise of uncorrelated returns, and obviously you've seen the space draw down at the same time as the more developed traditional finance markets. We've seen where this has been the worst year for 60-40 diversified portfolios for many decades. And so what's happening, you can say that they're correlated on the downside, but that I think is just a little bit naive. I think the thing to realize here is we've seen the biggest monetary shock caused by central banks across the world that the world has ever seen. So way, way bigger than we saw in '94, magnitudes bigger. And I don't think there's an asset class in the world that hasn't responded to the size and magnitude of this financial tightening. And so, yes, digital assets have been correlated to the downside. What we are beginning to see now is that correlation is beginning to break, and we've seen very clear basing indicators of most of the digital asset space. So for us, we've taken this period as an opportunity to work on our systems, work on our relationships, make sure that our relationships we have with the street in terms of bilats and CSAs and these kind of things are all as good as they possibly can be. We spend a lot of time negotiating with counterparties, making sure that we've got everything we need in place for when the money comes back into the space. And I think that as quickly as the FOMO disappeared, I think it will come back again. And so we've just been working away in the background, making sure the product and the way we approach it is as best in class as we possibly can do. And just effectively waiting for the. It doesn't have to be an end to the hiking cycle in the US, but an indication that the pace of tightening is going to slow or stop. And I think that would be enough to reward risk takers in all assets, whether they be digital or traditional finance assets.
I think just
yeah,
to
absolutely.
add
Thank
to
you,
Vimal, I was just going to add to Vimal's comment. I think one of the things that a lot of people forget in crypto is we actually start, if you start with a stable coin is essentially a credit instrument, right? It's an IOU note from someone else to say, I'll give you your dollars back, right? And the further and further you enter into the ecosystem, the more credit and what I would call, cross-correlation credit that you start to take on board in different pools, if you're in DeFi, in different counterparties. So if you take a centralized exchange, right, it's just a private, right? So if anyone understands what that means, you should sit there and go, okay, I've got more credit risk than I even need. So I've got a stable coin credit risk. I've got CeFi credit risk, centralized exchange credit risk. Then we start to realize exchanges and decentralized, and you start to take on individual people credit risk in some cases, right? And none of this is priced properly in crypto, like absolutely none of it. If you said to me, hey, I'm going to give you $100 today, and you're going to promise me to give that back to me, so I've got a bit more efficiency in my day-to-day dealings, but not pay me any interest, you would say, hey, that's nuts, right? That's not going to happen. But that's what we do in crypto. We make decisions around efficiency, and we take on an exorbitant amount of credit risk across the system. I think where our system, our DeFi fund will do very well, and the partnership with Trovio, and in that, I mean, if you say Vimal's been in the markets for 30 years and understands, credit risk extremely well, and I've been in the markets for 25 years and traded, cross asset risk all over the world, and I'd say I understand credit risk really well. And the way our models work with Reese and the team behind the scenes, they really do look at this in very serious detail, and can see where all the mispricings are, and also see where the real risks are that, at the end of the day, we say you get rugged in crypto, but in credit terms, you've just defaulted, right? And there's a huge default risk that we take on board in the crypto ecosystem, and it happens daily. And so I feel that this product that we launch is really trying to address the need for a measurable set of values or quantitative values that can actually price this risk, because we're not going to get it through the traditional credit system.
Yeah, I think that's completely correct. I mean, the whole point of this space is there is significant value to be generated out of idiosyncratic trades, but because the space is so nascent, you need a very systematic way of approaching it. I think that's what you guys and the Yield App team, the DeFi team, is certainly bring to bear on this product. So we're incredibly excited about it.
No, thank you guys. Thank you for the insights. And over to really kind of expand on what we're doing in DeFi and overall the opportunities that are coming. I mean, obviously we're building as a firm in DeFi. We're building DeFi products. We're building DeFi tooling internally. Just overall, I mean, it's been a few months since our community has heard from our DeFi team. I mean, can you give us a glimpse into trends that are happening and really exciting developments overall?
Yeah, sure, Tim. I'd love to. So I guess while the opportunity set has certainly compressed as of the last few months in line with the overall market direction, we've seen a number of the key players push further up that risk curve at the beginning of the year. As yields began to tighten, it seems to have really settled down now, as Vimal mentioned before. So that opportunity set is really starting to level out. We go through these ebbs and flows, but there's still a wide range of alpha available out for those managing that risk responsibly. And I guess, broadly speaking, on developments, while the price action has been fairly bearish and the macro direction is rather uncertain, there's really no uncertainty about the development and innovation that's going on at DeFi at the moment. The development pace it's really electric right now, and we're seeing great strides forward, particularly in cash flow positive protocol design. Primarily with a focus on decentralized perpetuals. There's been a lot of talk around GMX lately about how those decentralized perps play into the ecosystem, and a number of forks or similar products such as Gains Network doing similar things, providing those on-chain perpetuals as an alternative to leveraging on exchange, for example. So that shift away from yield farming rewards token to more of a real yields off the back of protocol fee generation, in my opinion, has been a great leap forward for the industry in the last few months. We're seeing some innovative protocols also begin to amalgamate various NFT usage into financial products. So we're keeping a close eye on that. And we, as Tim alluded to before, we have a few protocols of our own in design at the moment and moving along nicely. But overall, it's prior to the decentralized perpetuals really taking off with GMX, we really had two primary sources of real yields, and they were the lending markets, Aave Compound, for example, and trading fees from decentralized exchanges such as Uniswap and PancakeSwap, etc. So the introduction of decentralized perps really runs a third pillar into what you would refer to as real yields, where it's not necessarily a protocol supplementing APYs via a farming token as a loss leading product. It's much more of a focus on fee generation and return back to the token holders of these protocols. So positive developments overall. And I think if I compare this back to the 2018 kind of bear market, there was nowhere near this level of development. Of course, everything was still rather uncertain on the direction of digital assets, and this pullback in trend has really not really compressed development. If anything, it's accelerated as people have become more focused on delivering great products. So that's my high level thoughts off the cuff, Tim.
Yeah, no, perfect. I mean, there's so many exciting things happening. It's obviously hard to keep up. I know, you and the team are, pretty much working the 24/7 just to keep pace on the developments happening and up to date. And I guess part of that, we've launched. Some of you might have seen we've launched Yield Up Labs. We have a Twitter account. We have a landing page coming. We're having a newsletter. Just really want to kind of really capitalize on this and really show what's happening in the DeFi landscape. Obviously, it's separate from the Yield App brand, and obviously those that have followed us from the beginning know that we do generate yield from DeFi as well as other strategies. But particularly today, we're really concentrating on DeFi. But could you maybe kind of even, I guess, expand on that? Like, what's the idea of Yield App Labs, and what are people to expect?
Yeah, sure, Tim. So the whole idea behind Yield App Labs was the DeFi team itself at the moment, because as you mentioned, we spend, well, it's 24/7 role, right? And we focus on developing out this tooling that can help us gain an edge in the markets and these risk models, etc., and everything that we're really trying to build around optimizing our performance. But at the same time, that actually produces a lot of content, and we wanted a specific research and development arm to showcase that kind of those developments we're building out, and not only as far as where we're seeing like trends, etc., go, but also showcase the ability we have to assist other protocols in the space. We do consult in a number of team members inside the DeFi team are advisors to many DeFi projects. So that is something that we also bring to the table. But the research and development to sit in our internal documentation it's a bit of a waste, to be honest. It's something that we wanted to share with the broader community about how we're looking at things and what kind of trends we're identifying. And I think it's a really good value add, particularly for our community, but to also showcase the amount of effort and thought that goes into how we place capital, but not only capital, I guess, but our energy in the space as well. Yeah, so that's the high level view of the research and development arm at Yield App Labs. And no doubt we'll have a few products hitting the market any time soon. So.
I think one thing I would say about the Yield App Labs and what I would say is our Web3 business is we're not trying to be, bringing sort of attention to problems and creating like a kind of a FUD Twitter sort of community, right? I think we're trying to really showcase our skill set, what we do, how we utilize it. Going through the summer and seeing just the absolute destruction that took place in not just DeFi but crypto and traditional assets as well, really brought home to us, the value that we have behind the scenes in this organization. And it's amazing that when we were putting together the deck that we were, telling a little bit about the company that we had, all we really had was, we've got some depositors on the one hand earning interest, and then they get their money out when they want it. And it was quite a boring kind of deck. And then someone said, well, what goes on behind the scenes? And Tim was pushing us all the way, and he says, well, you do this, you do this, you do all this stuff, and all of a sudden you've got a very, very interesting business that I think that we're trying to really bring forward. And obviously the relationship with Trovio, that's part of that. The Web3 or the Yield App Labs and the stuff that comes from there, and the consulting and the work we do there, and ultimately what it makes us is better decision makers when it comes to managing money. And I think that's what we do well. I think we've shown that we can manage large pools of capital and remain extremely liquid. But all the drivers that go into that decision making, we're trying to make available to a much broader community than we currently target. And I think seeing us being a little bit more active and etc. I mean that's all part and parcel of this whole pivot towards trying to be more relevant to our community.
Thank you, Lucas. And Wimel, I guess I'll pass this back over to you. I mean, thank you for joining us today. We wanted to really make a strong introduction to Trovio, and obviously is a very strategic partner of ours, and we're doing so much together. And do you have any kind of final words that you'd like to share with our community today? Maybe more about Trovio, how to find more information, or
Yeah, no, thank you for that. Just on the relationship, it's funny that the space is it's nascent, it's emerging. We're all aware of that. There's great returns on offer to people who approach the space with the right way, with the right risk framework and investment guidelines, etc. But we've also got to remember that the space isn't actually that large. When we look at the total market cap of this space, it's not big at all. I mean, you look at the size of the gold market, it's 15, 16 trillion, and you look at our space, it's really quite small. And I think that when you talk about the kind of size that we're running together now, I think there's only about 20 managers in the world who's running north of 100 million. And so, with this relationship we have now, we're closing in on that. We don't need to see much of a little uptick in the market to be well above that number. So our approach is to the space is going to grow. There's a massive influx of talent, and it's really about how we work together to utilize that and to make relationships like this one to get the best outcome for our clients. Because it's not a space where you want to be competing against each other. Everyone's learning. The space is changing very quickly, and so cross-collaborating on things is the way we're approaching it, and that's certainly the best way we can get outcomes for our clients. So that's something we're really happy about. And then otherwise, just on the way we approach a space, as I mentioned, it's about making sure that everything we do is a considered decision, that we manage. My key focus is on the risks. Now, whether they're operational risks, so for example, for this fund, we'll be using capital, which links with MetaMask Institutional for helping on the execution and the custody and trading side, or whether it be on the portfolio risk side, where we partner with Haruko. But effectively, our view is to partner with entities who have a good understanding of the space, have good products, and put all that together to effectively get the best outcomes we possibly can. So that's how we approach it. That's how we think this space is going to evolve, how the opportunity set's going to build, and that's why we're so happy with entering this partnership with you guys.
I feel that the feeling is definitely mutual, and obviously Lucas has done a fantastic job in guiding us towards the right partnerships, and it's a long and difficult process, but we're very enthusiastic about working together on this and many other things to come as well. So, Lucas, any other final words?
Yeah, just this is just the start of many things to come, and Trovio is deeply involved in a lot of the projects that we're looking to launch. Ultimately, we're trying to make sure that the trust that we've earned in this space is maintained, and making sure that we everything we launch has got a process and a high quality implementation. So yeah, this is going to be the first of many things that we do together, and I'm hoping that the people who see what we do are excited and want to be involved.
Absolutely. And DeFi team, anything you'd like to add today?
No, nothing else from us, Tim. Hop on and follow Yield App Labs on Twitter.
Absolutely. So
little plug.
Perfect. Well, thank you. Thanks everybody for tuning in today, and Wimel, thank you for joining us, and looking forward to really getting this kick started.
Thanks, guys.
Thanks so much.
Appreciate it.